Good morning, Brew Daily Show. I'm Neal Fryman.
And I'm Toby Howell.
Today, a special holiday episode for Labor Day.
Brew Markets host Ann Barry dropped by, and you're definitely going to want to hear her take on Jim Cramer. It's Monday, September 1st. Let's ride.
Good morning and happy Labor Day. I hope you are all enjoying the day off and honoring the American labor movement by relaxing on your couch.
We have Ann Barry in the studio today, a name that might be familiar to some of you as she stepped in to co-host the MBD podcast over the last few months.
Ann's LinkedIn is longer than the Irishman.
She's been a CEO, founder, broadcaster on TV channels like Bloomberg, invested billions of dollars as a private equity deal maker, and now hosts 2 shows for Morning Brew, including Brew Markets, which you should definitely go and check out.
We sat down with Ann last Wednesday to see if AI is a bubble, chat about her new show, and hear why your English teacher could be your most valuable investing mentor. But first, an ad for our sponsor, Roku.
Neal, what do Americans love more than anything else?
Ooh, hot dogs and all-day breakfast.
Close, but I was thinking TV and Black Friday shopping. Now it's easier than ever for brands to get on the streaming platform Americans spend the most hours streaming on, Roku, with Roku Ads Manager, just in time for the holiday season.
Roku Ads Manager combines the simplicity of digital ads with the impact of TV. Advertisers can use it to manage, optimize, and measure CTV campaigns in a few easy steps.
It's as easy as running an ad on social media. Set your budget, select your audience, and you're ready to go live.
Plus, you can connect your Roku Ads Manager with Shopify to develop interactive ads, create and track campaigns driving to a specific goal, and monitor spend and performance in Shopify.
Right now, our listeners can get a $500 match on their first $500 spent with code BREW500 at ads.roku.com. That's code BREW500 at ads.roku.com. Terms apply. And now for our interview with Ann.
And you've filled in as a host on Morning Brew Daily. You now host your own show, but our listeners may not know who you are, what you're about, besides that you're British and more articulate than me and Toby. So tell us a little bit about your career path. It has not been a straight line.
It hasn't been a straight line, and gosh, where do you want me to start? Should I start backwards, or should I start at the end and go backwards, or should I start at the beginning and go
Christopher
forwards?
Nolan style backwards, yeah.
Okay, so here I am today. I do have a podcast. It's called Brew Markets, and it drops every afternoon at about 4:20. And just to set the stage for what it is and what we try to do, and then I can explain why my career has led me to sort of position it with the team the way that we have done. So 4:20 every day rolls around. We start filming at about 3:50. So we are literally filming as though live right as the bell rings at the market close. So we're capturing the day's news. We're honing in on some of the biggest reasons that the market moved. And we're really focusing on the why. Why did this story matter? And we try and focus on what are we able to say because of our backgrounds that other people aren't talking about? So, for example, and this is something you and I talked about, Neal, when we were covering, I was covering for Toby, who was gallivanting around on vacation. We were talking about Target CEO leaving. And one of the things I've done in my career is I've served on boards. I've been on public company boards. I've been on private company boards. And I have lived through the process of exiting a CEO. And I've lived through the process as a board member of trying to hire a CEO and figuring out what kind of leadership is appropriate for a company at a particular point in time. And so in that conversation, you and I talked about, was this the right decision? What was the board thinking? Is this really going to drive any change? My opinion was probably not. And my background is the reason I think probably not. It's not sort of coming out of nowhere. That's what Brew Markets is trying to do. We're trying to bring the facts. We're rigorous about research. We fact check very rigorously. We do our own primary research. During the day, we're calling people. We're reading the underlying filings. I'm a nerd. I go into the numbers, and we're very rigorous about that. And then we say, now let's put some real life experience around that.
So what got you interested in investing in markets to begin with?
Yeah, that's a great question. Well, if you go all the way back in time, I didn't think I was going to be interested in investing in the markets. I absolutely did not grow up. When I was a little girl, no part of me was going, one day I want to grow up and be an investor. Absolutely not. I wanted to be a writer or a journalist. And just a side note, for anyone who's listening or watching who's an English literature major or an arts major, when I actually ended up in investment banking, and I'll go back to answer your question as to how that happened, a couple of years in, I wrote a letter to my English literature high school teacher. And so I just want you to know the best training I ever had for being an investor was English literature. Because when someone puts in front of you a poem or a play or a piece of prose you've never seen before, and you need to figure out what is it saying and what is it saying to me specifically, and argue the facts around why you have that perspective, nothing comes closer to the investment decision process than that, right? Looking at a company from a cold start, getting through the facts and coming up with an opinion is exactly the same process. So, look, I ended up being one of those kids who I enjoyed math and I also enjoyed the arts. And I wanted to find a way to bring those two skill sets together. And so I ended up doing economics. I was always fascinated by public affairs. I'm a complete politics junkie. I wanted to know what was going on in the world, wanted to know what was moving things globally. Did economics. Sort of, Goldman Sachs turned up at college and said, we have a great analyst program. One other thing I would say, I came from a family with absolutely no money. I was the first in my family to go to college. And financial security was really important to me. And I'm the eldest child. And, banking turned up with a path to a potentially lucrative career. And I was like, I need to do that, not just for myself. I have a whole family I want to look out for.
Is there a moment that you look back on now in your career as it's unfolded where it was an inflection point where you said, I'm really hitting my stride now, or I know what I want to do now?
Yeah, the inflection point was a moment where I started to hit my stride, but at the time it definitely didn't feel like that. And so to get to that point, after college, I went to Goldman Sachs, had a great time there. I also went to business school, which I can also talk about. And I was investing in private equity and buying companies, control positions for a long time. And I left Goldman to start a private equity fund, and I was a partner at a firm. And I ended up becoming CEO of the biggest company we owned. It's a long story around how, but this happened in late 2019. And what this business does, actually, it's thriving today, is provide services for hotels and restaurants and spas. Well, no one told me that 4 months into the gig, COVID was going to happen and shut down literally 99% of the business. So I'm a first-time CEO. I'm pretty early in my career. And talk about an inflection point. This was just drinking from a fire hose. And I had the most unbelievable board, to go back to the conversation Neal and I were having, of extremely seasoned CEOs. One, a gentleman called Larry Bossidy, who I was devastated passed away recently. He was a very famous CEO. Another woman called Gail Mandel, who'd been very senior at Wyndham. And I would turn to them and said, being a CEO is an incredibly lonely job. And being a CEO through a crisis, when you have got to keep moving, you've got to make decisions, really hard ones, every single day at scale that are going to impact people, the homes that they go home to, the energy that they bring to their families, the income levels that they have, or in that case, do not have because of the pandemic. It was an extraordinary inflection point. And to answer your question, Toby, did I hit my stride? In terms of realizing I had the capacity to do something really challenging and to throw my energy into it and be drinking from the fire hose and learning something new every day, then I hit my stride. It was the fastest, most incredible learning I've ever had to do in my life.
How big was this company?
We had 6,000 people until the moment we did it, which was quite soon after March 2020.
Yeah, wow. That is truly a drink from the fire hose moment. I do want to pivot now to another company and CEO that has kind of become the de facto CEO of the market in recent times. That is NVIDIA. We were recording this just a few hours before NVIDIA reports earnings, which has become one of the most important events in the financial markets these days. Some analysts have been warning of an AI bubble, and tech stocks have been a little bit wobbly for the last few weeks or so. So there is a ton at stake. What is your read on the AI trade right now?
Oh, gosh, the crystal ball. So I'm going to be really honest. And when you host a markets daily show like I do, Brew Markets, this is like not only honesty, it's real vulnerability. In the last couple of months, there have been many, many days where I've woken up, looked at my personal portfolio. We don't give investment advice, but I do sometimes talk about things I've invested in that have gone really well, like Netflix, for example, and things where I'm like, oh, gosh, we've really got to figure out what to do. Over the last couple of months, there have been more days than not where I've woken up going, I think I should just sell everything. I think I should just take profits. I look at my NVIDIA holding. I do own NVIDIA. I look at my Microsoft. I look at my Alphabet. I look at my Meta and go, this could go away, right? And I am nervous that we are in not just an AI bubble, but an AI-driven bubble for the entire market. And here's the specific reason why. When you look now at the expected returns on US equities, when you look at the concentration in the Mag 7, or just sort of tech generally, the equity risk premium, I'm going to explain what that is tiny. It's practically zero. And so just to bust through the jargon for a second, you've got different kinds of assets. You've got less risky assets, and the closest thing to being riskless, in theory, is the US Treasury. And then you take a look at equities, at stocks and shares, and they typically trade in a way that the return you get is at a premium. It's more than you would get from Treasuries. That difference is your reward for taking the risk of owning equities. And typically that difference, that reward for risk, has been meaningful. It's almost nothing right now. And it just cannot be in my mind that owning a share in Palantir, which I do, by the way, or owning a share in Workday, which I do, is the same level of risk as a United States government bond. That does not make sense. That's a very long way of saying, yes, I do think that we are in bubblicious territory.
Well, if you sold any tech stocks over the past 30 to 40 years, you would probably regretted that
Yeah,
decision.
absolutely. And that's why I'm tortured by it. It's why we're all tortured by it, right? It's why I wake up in the morning and go, should I sell today? And the answer is I haven't. I haven't for exactly that reason, Neal.
So after NVIDIA reports, that basically wraps up earnings season, and you've listened to a lot of calls and heard a lot of CEOs say a lot of things. What are your major takeaways from what you've heard over the past few weeks and what companies are saying about the economic environment and how their businesses are doing?
So I would say that the strength of the US consumer in the aggregate has surprised me to the upside. So the places that I go to try and figure that out, and there are so many of them, for the following reason. There is no such thing as the US consumer or a US consumer. We've got so many different demographic groups with different income levels, with different employment horizons, with different needs about providing for a family, with different regions, right? The diversity that we've got in the US is extraordinary. And so the diversity of businesses that we need to serve all the different populations of consumers is huge, which makes earnings season when you're in my seat a complete nightmare, because every day you're just flooded with data and we try to sort through that on Brew Markets. When you look at things like credit card information, it looks as though most consumers are doing all right. People aren't defaulting on their credit card debt as much as was feared, because interest rates have stayed up for as long as they have. When you take a look at some of the retailers, not just the Walmarts of the world, but Kohl's just released earnings before recording today, and it's done pretty well. A couple of the home furnishings businesses have done pretty well. So that has surprised me. The other place I've been impressed is for companies and businesses that have taken seriously the tariff threat. And I know that both of you are really concerned about that, and you turn out to be exactly right. Both of you were really consistent towards the end of last year when I listened to you talking about your concern about tariffs that were likely to come. The ones who took it seriously, the ones who moved quickly, the ones who diversified their supply chain and had a plan and focused on executing have done really well, and they've been rewarded, and you see that.
I do just want to zoom in on one of those particular consumer cohorts that you were mentioning, and that are people who eat, $18 sad desk lunches. We like to call it bowl slop. Those companies have not done very well. I'm thinking of Chipotle, Kava, Sweetgreen. They kind of got wrecked during this last earnings cycle. What do you see on the horizon for those bowl slop companies?
I think it's going to get really difficult. And just because the contrast, who's done really well? Chili's has done really well.
Yeah.
Yesterday, I had a conversation with the CEO of Potbelly. And back to my point on execution, Potbelly, which is a small market cap business, has been very attentively going out to customers and saying, but which products do you want? How should we price it? How can we give you bang for your buck? How do we give you a prime rib steak sandwich, which I ate yesterday in preparation for my conversation, and pack it full of calories so you feel you're getting a good outcome? I think the sad salad group are going to have a tough ride for the following reason. Are you going to save your money for dinner with your friends or for something when you can have a sandwich at your desk? I think it's going to be difficult. The second thing I would say is, and I loved Sweetgreen, a lot of it tastes the same, right? I don't care what the salad's called, but at the end of the day, it kind of tastes the same, no matter whether it's chicken with sweet potato or whether it's something else. Kava, and I say this, and Kava, if you're listening, please don't pull sponsorship. We love you. It's just not as flavorful, I thought, as it used to be. And I love Mediterranean food, and it's heavy, it's dense, and it just doesn't excite me in the way that it used to. It's tough. They've got to do something new.
Toby's a big Potbelly guy.
I love Potbelly. Well, I love them all. I literally love Kava, and I love Sweetgreen as well. But
do?
Potbelly was slept on for so long, so I'm glad they're kind of getting flowers right now.
It's one of the few fast casual chains that actually reported same-store sales growth.
Yes, correct.
This past quarter. Another theme of the business world this summer has been marketing fails. I've seen a number of recent marketing campaigns receive a lot of pushback. Thinking American Eagle's Sydney Sweeney jeans ad, Cracker Barrel's now nixed logo change. As an executive, how do you know when to pivot because of criticism or when to block it out and just charge ahead with your strategy?
That is a really great question. And I think, well, no, I'm sort of stumbling over my words, not because I don't have an opinion. I'm trying to make sure that the answer that I would give to that is different depending on what the mistake relates to. Okay, so if it's a marketing error, I think you own that as quickly as humanly possible. I think Cracker Barrel, to its credit, said, we got this wrong. We're gonna turn this around, and they made that decision very quickly. It is very hard for people to say, I got it wrong. It's hard for them from an ego perspective, and it's hard for them because they feel as though it's a sign of weakness and that they're going to be held up as a weak leader. So when I think they do it, it's a sign of strength. When I think about the Sydney Sweeney situation, I think that is different. I don't think that was a decision that the company was trying to make around did they make a mistake or not. I think it's a decision around whether they wanted to make a statement that certain motivations for criticism was going to change their behavior or not. And that brings me to a broader theme, which is around what do you do when your shareholders start having a more emotional reaction to what you're doing than thinking about you as an investment in a business. And that brings me to the issue of meme stocks, because I don't think that Cracker Barrel has become a meme stock. I do think it's become a highly emotional stock. But I think we're starting to see more and more, whether it's Krispy Kreme, we saw it with GameStop, we've seen it, I think, with Open Door. What happens when you've got retailers wanting you to do things as a business person you just don't think it's the right move? And do you want that job? I would not want to be the CEO of a meme store. I think it's a miserable job.
You've interviewed a lot of CEOs, and they will say in interviews that they don't pay attention to the stock price.
Yeah.
But do they?
Of course they do. Absolutely they do. And here's why. Lots of CEOs, like Toby, we're talking about what it's like to be an athlete, they're really competitive people, right? The barometer of their success is the financial performance, the revenue and earnings. And usually, again, take meme stocks out of it, the correlation between your share price performance and your financial performance historically has been pretty close. If you're competitive, you want to be a winner, you want to see your share price going up, right? That's number one. Number two, your employees want to see your share price going up. If you want to get the best talent, you want to get winners, they want to be part of something that's rising as well. The third thing I would say is money, right? The cash, the dough that ends in their pockets, the motivator in American capitalism. Public company CEOs are explicitly compensated using stock. Stocks, shares, options, they are highly motivated for that share price to go up because their net worth is on the line. So you bet. If anyone says, I don't pay attention from one day to the next, yes, I believe them. If they say, I wish I didn't have to pay attention from one quarter to the next, 100% agree. But I never look, calling BS.
I love that. Let's put yourself in the shoes of another CEO that's been put in a tough position recently. The U.S. government just took a 10% stake in Intel and signaled it wants to do that with a few more companies in the future. What do you make of this administration's interventions into private companies?
This one's tricky. This one's tricky for lots of different reasons. And I'm going to share, again, being very honest, what my reaction was intellectually, so read business response, and then viscerally for a couple of these examples, because there's actually been more than one. Before Intel, we had MP Materials, right? The Pentagon becoming now the biggest shareholder in the rare earth miner. Rare earths, for those who are listening, really important component in military items, in phones, in mobile devices. It's critically important. And the US has historically been extremely dependent on China to get a hold of them. And, you know, the negotiations for trade with China are happening now. Like, we know it's happening now. It's not getting a ton of coverage. People are traveling to go meet each other right now. And this is on the table as a massive issue. When I saw that the Department of Defense was becoming a major shareholder in this particular company, the economist in me, the classically trained economist in me, the Wall Street trained banker in me, the private equity investor in me, the public company shareholder in me, thought this was the beginning of a new chapter that I have concerns about. Because this kind of interventionism interventionism is not something that you think of when you think about the US economic model at all. And I think newness can be very disconcerting for the market. But the policy wonk in me, the kid that grew up wanting to know what makes the world go round, and me looked at that and went, we need to do something about securing supply to these critically important components. And my visceral reaction to it wasn't as negative as my intellectual one was. I do understand a play for this, but here's also just to go back to Intel, because you brought up Intel, I want to answer your question. Intel was a struggling company. Intel got it wrong. What I worry about, different from MP Materials, is that this becomes propping up companies that, frankly, should be forced to be held accountable for poor performance.
So if you were an investor looking at this deal, should you be chasing these interventions or you should be staying away from them?
Okay, so this is the controversial piece, and this is where there's a difference between trading and investing. Okay, I think somebody who's day trading all day, I thought about it. I mean, I really thought about it. I saw Howard Lutnick come out and say, oh, we may want to start picking up positions in defense stocks. And I sat with my producer, John, for Brew Markets, and I just watched, they're going to rip. Defense stocks are going up. Should I buy just to trade? That's the trading part of my brain. I didn't do it because I'm an investor, back to Neal's point. I want to hold these stocks for as long as possible. And my fear is that we see a short-term pop because we see that's what happened with Intel. We see that's what happened with MP Materials. But at some point, we have an election, right? And policies reversed. Or at some point the market says, oh, wait a second, we don't feel quite so confident anymore that market forces are going to dictate the outcomes of this businesses and poor performance is going to be changed or forced to change. Are we going to go into a world where government contracts can now prop up the stocks of these companies because the government's now a shareholder? We don't know the answer to that. And if those things happen, I think these stock gains will move. So the trader in me wants to nip in and start, looking out for posts on Truth Social. The investor in me is like, no, I actually want to know what the playing field's going to look like.
Let's talk about private equity. You've been a longtime investor into private markets, which regular folks like us typically haven't been able to access.
Well, we should talk about that, yeah.
But that is changing dramatically. 401ks are now adding private assets like crypto, real estate, pre-IPO companies to their holdings, in addition to classic stocks and bonds. Is this democratization of investing or a risky path to go down?
It's both at the same time. And I want to start with the democratization piece of it. Because if you go back to before the pandemic, if we go back to prior to 2020, 2021, and this extraordinary run that we have seen in the US stock market, initially, and I say before all the AI news popped and captured our attention the way it has done, low interest rates was a huge driver of what pushed up the stock markets. If you go back further in history, private equity funds, the good ones, not all of them, the good ones, have outperformed the stock market. And for the following reason, I believe, and I'm going to own the fact that I feel some bias on this point, because when you've seen it done well, you know that the following happens. When a private equity firm owns a business, they lean in. And I'm going to say what that means. They hold the CEO accountable. They drive change. We can debate good change, bad change. The change is made. Public companies struggle to make change. They struggle to change their management teams. They take years to exit their CEOs, even if they're not performing, or they turn around and bring them back, right? So that doesn't tend to happen. The patience for that doesn't tend to exist. And so as a change agent, private equity is there. So when it's done well, and it is not always done well, it can drive outsized returns. Now, one thing that Fed Chair Jay Powell said on Friday, I know you covered it, Jackson Hole, buried down in the bottom of his comments was the following statement, I'm paraphrasing. The neutral interest rate, meaning the interest rate we should all expect to be around for the long term, is going to be higher than it has been, and it's going to be higher than we saw the pandemic. So he's basically saying rates are going to be higher for longer no matter where they end up. In that environment, private equity tends to do quite well because they double down on making operational change. And so it's a long way of saying, if we're back to a sort of, quote, more normalized world, do I want everyday investors, pension fund holders, people working hard? Do I want them to get access to those better returns? All day, every day, absolutely I do. I think the democratization of that is fantastic. Where I worry, private capital can look different. I'm talking about private equity that I've been in, big mature businesses, cash flowing, stable, hopefully not going anywhere if they're well run. Venture capital is a different beast, and we've all fallen in love with venture capital. We all want to find the next SpaceX. We all want to be the early seed investor in the next, pick your glamorous, in the next OpenAI. Highly unlikely. Highly unlikely, and a lot of venture capital funds fail, and the vast, vast, vast majority of early stage investments fail. I've made them. Look, I've got some that have done really well, some that haven't. I am worried that, please, I do not want people to use their retirement funds as lottery tickets. And that's where I worry. I think it's both at the same time.
What about SPACs? We've kind of seen a SPAC resurgence recently.
Yes.
Chamath, the king of SPACs, as he likes to call himself, is back in the game. Where do you see that road kind of leading?
Gosh, anytime you got someone who's self-anointing titles, you're in a tough spot, right? So here's what I say about SPACs. They've been around for a long time. They've been around since the 90s, and I'm lucky that I've spent time with folks who were around as that first generation of SPAC innovators. And in theory, SPACs can be a good thing. They've gotten bad raps, and I'll come back to why. But in theory, here's how they work. So just to explain what a SPAC is, it's a shell entity. It's a legal entity. It doesn't have an operating business in it. So you can have the Neal and Toby SPAC. And what the Neal and Toby SPAC will do is go set up a legal framework, go make itself public, and then I can turn up, buy a share in the Neal and Toby SPAC, you take my cash, you stick it in a trust, and then you guys have got 2 years to go find an actual operating business to go buy. So what am I doing as the investor? I am basically buying a share in the Neal and Toby SPAC because I trust that you two have got great judgment, great experience, and you're going to find a really good company to go buy. That's what I'm buying into. And I don't get the right to ask many questions around that. I just have to stand by and watch till you've done it. So anyway, if you go back, SPACs, lifted off in 2020, 21. It was the halcyon days of SPAC. A bunch of deals that didn't work out so well meant that businesses, perhaps the diligence wasn't as good. Or when these SPACs happened, the Neals and Tobys equivalents were getting special equity, which meant they were perhaps motivated to get a deal done. That's why things sort of went wrong, and then they went away. So now they're back. Here's why I think they're not terrible in practice. What SPACs can do, if they're done well, is give the opportunity for companies to go public where, for whatever reason, it perhaps, the market at a point in time just wasn't allowing them to go public. It is a way for a retail shareholder to partner with really good investors and really good deal makers if it goes well. That's not a terrible thing. And at the end of the day, if that SPAC doesn't do a deal, I get my money back with some interest. So the problem is, what happens if deals go poorly? Well, the new generation of SPACs, they're being structured a little bit differently. A lot of them now have the feature that you can't have this quirky incentive piece around it so that the Neals Tobys in the SPAC get like special viv, right, if they get a deal done. I think the level of skepticism is high enough, people would do more work. That being said, you've got to do your homework on who the SPAC manager is. At the end of the day, when all said and done, that's it. If you trust that SPAC manager has a track record, a history of getting things right, go at it. If they don't, I don't understand why you'd go put your money.
Would you trust us?
I trust you guys.
The Neal and Toby SPAC?
I trust Neal and Toby.
I don't think so.
All right, all this newsy stuff is great, very interesting, but just to finish up the podcast, let's get a little dessert here, and we want to turn back to you as a person. Who's an investor or a business leader that you look up to? Who's inspired you?
I would say, gosh, there's so many of them. I'm going to say this, there is a business leader, and I'm going to focus on the word business as opposed to leader in my statement. I do want to talk about Elon Musk for a minute. He's wildly controversial. I don't like the stuff that he puts out there on social media that's unpalatable. I will say that very clearly. There's a book I read that really stuck with me. I read Walter Isaacson's biography of Elon Musk, and someone wrote into Brew Markets the other day and said, what should I read? And I said, I think you should read this for the following reason. For anyone who's been inside a fast-growing company or who's run a business or has just stood there going, what is it that this guy does that's just so different and out there? I was fascinated by the fact that Elon Musk has been able to not only come up with the ideas for, but actually go make happen and bring to life in this world as many different successful businesses at the same time as he has done. It is extraordinary. And the fact that he is able to stay as leader of all of them with the vision and the passion to stick with it for as long as he has is extraordinary. And here's the last thing that caught my eye. Because do I look up to it? Kind of. And I think he's the only person who's allowed to do this. When he's got an issue at one of these companies, let's say he's got an issue at X, he'll go find engineers at SpaceX or Tesla who he can drop in as a SWAT team to go figure it out. And here's why I like that. He is unafraid of something I have learned works. Go find great talent, go find great problem solvers, and have some confidence that even in a different environment, a different company, they will go figure it out.
You know what it reminds me of is you stepping in to co-host Morning Brew Daily.
Yes.
You are kind of that executive talent that we are looking for. We are going to finish off the podcast with a fun segment that we're just calling Overvalued, Undervalued. Basically, we're just going to give you something. Maybe it's a company, maybe it's something else. And you give us a little spiel on why you think maybe it's overvalued or undervalued.
Or properly valued.
Or properly valued.
Okay.
So up first, Palantir.
Palantir, overvalued, can't help myself, bought a lottery ticket just in case FOMO kicks in.
Jim Cramer.
Jim Cramer, fairly valued. And here is why. Now, as I do what you guys do, doing a daily show, and these guys are nodding. If you can't see them on the camera, they're nodding. If you can't hear them, you can hear their nod down the microphone. Doing a daily show, fresh ideas, bringing the energy to do that day in, day out for as long as he's done it. He may not get his stock picks wrong all the time. No one does. But I got to tell you, just for sheer longevity, fair value.
His energy is unbelievable. I was watching his show last year, and I'd never seen it before, honestly. And the amount of energy he brought to the table, and the fact that when we are up at 4:30 and I'm scrolling through Twitter to see what happened, he's been tweeting 100%. For an hour already. Yeah.
He definitely kind of puts us to shame, honestly. Yeah. We got to step it up a little bit. Okay, the original Cracker Barrel logo.
Oh, gosh. Well, the market has just spoken and said it was undervalued, so I'm going to go with the market.
How about Dubai chocolate?
Oh, okay. So I love Dubai chocolate. I love chocolate in general. I love going to Dubai. You put the two together, I think that's a winning combination. I think it's still probably undervalued, and here's why. I think there is a world in which we see a lot more Dubai chocolate ice cream. It's under-penetrated. I want to go into Trader Joe's. I want to open up the ice cream thing, and I want to see Dubai chocolate.
I cannot believe the penetration it's achieved at bodegas in New York City, where I am seeing some awful combinations, though. Where
Fantastic.
I don't know. I'm saying that's way overvalued. Now I'm getting involved. Let's go with another trendy item, Labubus.
Oh, Labubus. Okay, so this is where to go. Once upon a time, I talked to a bunch of people who were senior in retail, and one of them was Mickey Drexler, who was behind the rise of J. Crew. And I said, Mickey Drexler, what's your superpower? He goes, because it's merchandising. When I look to buy stuff, I don't think about, do I like it? It's being able to put myself in the shoes of the customer and say, will they like it? That takes an amount of an imagination, creativity, and empathy that is hard for most people. I don't have it, which is why I don't get the boo-boos. I don't understand it, but I appreciate that lots of people love them. I do see Naomi Osaka rocked out onto the US Open with her sparkly, shining. She said it's not Billie Jean King, it's Billie Jean Bling, which I thought was super cute. So I'm going to say that they're fairly valued, but I say I don't personally understand it.
Okay, here's another one. Stainless steel cookware.
Oh, undervalued. I love stainless steel cookware. But can I say, do you know what's even less appreciated? That's copper. Don't you love walking into a kitchen and seeing fabulous copper cookware everywhere?
I genuinely cannot cook with stainless steel, though. I have
Why
tried.
not?
I only did this so Toby would bring this up.
I just can't make it not stick. Like, I know you're supposed to do the water test. I know you're supposed to get it to the proper temperature, but I put a salmon on there and it doesn't come off. I don't know what I'm doing.
You're definitely an air fryer guy. I feel like I'm looking at an air fryer.
I'm going to take that at face value and say you're 100% correct.
Oh, yeah.
I don't have it anymore, though. Yeah. You need to please give us a cooking lesson. Neal knows how to do it, but I'm rough.
I love to cook. We'll do that. We'll get a team meal.
Any others, Neal?
Yeah. How about Thomas Tuchel?
Pass. What's that?
He's the new English
The new manager for the English football team.
Oh, that's so mortifying. And you do not have to edit this out. You have my permission to send that out as well. Do you know what the great irony is here? Last time I was in London, I love to go to the theatre. And I went to the National Theatre. Go check it out next time anyone's over there. And there was a fantastic play. It was funny, about Gareth Southgate as manager of the English football team. So I clearly tuned out when Gareth left. That's my excuse. England, I love. I'm a very patriotic soccer supporter.
Well, then, on that note, here's a final one. The West End.
The West End of London.
Yeah.
I think it's undervalued, and here's why. I think that going to the theatre in the US, and I'm going to talk specifically about New York, which is where I live and we all are, I find it heartbreaking how expensive it is to go to the theatre now. And I say the same thing about museums. And when I think about young people, particularly if you grew up in a family like mine where there was no disposable income, you can't afford to go and see Hamilton, which is one of the most fantastic shows I've ever seen. Tickets are hundreds of dollars. If you're lucky to get a lottery one, you know, the odds are just not in your favour. The West End, to go see the same play or theatre musical in London, costs a fraction. I'm literally like 10% of the cost to go see it here in New York. So I think the West End is not only undervalued. I think it's a treasure, and I wish there were more of it.
Another great part of the West End is there's a great pre-show tradition of just hanging out in the lobby and drinking and hanging out.
Yes.
That just doesn't exist here.
Well, that's true of football
Broadway.
games here. That's true. That's a tailgate.
So you guys
that's like
do it for
theatre
theater, we
tailgate.
do it for football games.
And let's start it for podcasts. Let's get listeners in here early, 4:30 in the morning.
Irish coffee in the morning.
Have a pint.
Yeah.
Well, Anne, thanks so much for joining us. Always fun to hear your perspective on investing, life, and I guess the West End as well. If you want any more, Anne, go listen to Brew Markets anywhere you get your podcasts. It drops after the market closes every Monday through Friday. Anne, thanks for stopping by.
Thank you, guys.
Thank you, Anne.
Thank you.